Good morning, everybody. It's the 17th of November. We're Signal Centre Talking Boy. I'm Joe, joined by Steve and Taff. Good morning, gentlemen. How are you both?
Morning,
Yeah,
morning, morning,
very
Joe.
good. Very good, thank you.
Good. Excellent news. Right. Let's get on with it then, shall we? Let's do the headlines first, and then we can look at some charts and see what's happening ahead of the autumn statement today in the UK, which is likely to create some volatility, I would have thought. But first up, we had a solid increase in the US retail sales yesterday. The number increased 0.3% for October after no change to previous month, and this was above expectations of a 1% increase. That doesn't make sense. Anyway, underlying sales increased 1.3% on the month after a 0.1% decline previously, while the control group posted a 0.7% gain. US housing weakness continues. The NAHB housing index dipped further to 33 for November from 38 previously, below expectations of 36, and the lowest reading since April 2020, and the second lowest reading for 10 years, which reinforced unease over the housing sector. We've seen some mixed rhetoric from the Fed. The San Francisco Fed President Daly stated that there is evidence that consumers are stepping back and that the Fed wants to see a slower economy. As far as interest rates are concerned, she stated that a pause is off the table right now with discussions on the pace of hikes. She added that a high of 4.75 to 5.25% is reasonable. Fed Governor Waller stated that rates still had a long way to go, but was happy to slow the pace of rate hikes. We've had some dovish chat from the BOE. The Bank of England MPC member stated that there is now a risk of over tightening and that there is a risk of the bank deepening the recession if it raises interest rates further. She added that the economy is seeing strong stagnation in the services sector and that there has been a much bigger slowdown in UK trade compared to the rest of the world. Brexit, everybody. Australian unemployment at a 48-year low. Data recorded a decline in the unemployment to 3.4% from 3.5%, the lowest reading since 1974. And today it's all eyes on this UK autumn statement. Chancellor Jeremy Hunt will present the autumn statement on Thursday with expectations of fiscal tightening of around £50 billion, with much of the tightening likely to be aimed later in the 5-year period to lessen the immediate impact. The latest OBR forecast for the economy and borrowing levels will also be closely watched. So if you are exposed to sterling today, you need to be aware of this. There's no set time from what I can see. It looks as though it may be around 11:30 today that we start to get some information coming through. So let's take a look at some charts. Steve, would you like to kick us off today with Bitcoin?
Yeah, I love that. I love the fact there's no set time for the autumn statement. It's almost like they want to try and catch everyone out.
Well, I've
Isn't
seen a
it?
couple of mixed things. So I saw something that said that it was tentative, so there was no fixed time. But looking at the other report I have here, it's around 11:30. So we'll aim for that, shall we?
Yeah, let's trust in the bankers and the politicians to do the right thing.
Steve.
Right,
Don't
let's
start.
just. I don't know. I feel like I'm on that soapbox again. Let me start with Bitcoin. What's that still doing here? Don't know. No idea. After last week's candle, I've been running for the hills.
Yeah.
Get your
If
chart
we
up
flip,
for us, then, Steve.
yeah, sorry. Let me just present it because it's pointless me talking about it if you're not enjoying it with me. If we flip the chart upside down, I'd be really hopeful that we'd make new highs. So that's how you should look at it. Last week's bearish candle was pretty disastrous overall, and the market hasn't bounced at all. We've had equity markets, indices markets moving higher, and Bitcoin can't because of what's going on with the FTX Binance debacle. So yeah, and there's going to be a knock-on effect for that as well. The amount of companies that FTX invested in is like huge. So you're talking about hundreds and hundreds of companies that are basically now worthless. So let's look at the daily chart, try and get some levels out of Bitcoin instead of just like promising you that it's really bad. I'll show you how bad it is. This is a bearish pennant. It's quite an extended pennant. I'd rather have a longer pole, but we've got what we got. So really for me, again, yesterday was another lower high. and I keep saying this, we keep getting these lower highs. There's no real, no one's prepared to step forward and to sort of like see value at current prices. So it's naturally just going to move lower. It's something we've been talking about for a long time. Resistance above comes in the form of around about 17,600, which was the 18th of June swing low. A break above there, and then you're facing huge resistance all the way up to well, carry on all the way up to 22,700. It feels like there's no way that price is able to break through there, especially with the current backdrop. And so the move really for this bearish flag, bearish pennant rather, would be a move to 11,139. And I think that is on the cards, especially with the candles we're forming over the last few days. I might stick with it on my gun to head again. Yesterday, we'll talk about my gun to head in a minute. I'm looking for a big break. If we do get a break, I expect people to be offloading below this 15,000 level. That'll be the maybe too much pain, and they might be thinking this is really not what we signed up for. We were expecting 150,000, not 15,000. So yeah, that's how cryptos is playing out at the moment. Looking at a couple of others, XRP is holding on to this hope that the SEC will find in their favour. I thought that was due out as well. They keep saying it's due out any day now.
So what is that, to make them a security rather than a crypto?
Yeah, it's basically everyone else believes it's a security apart from the SEC.
Right.
So that's, but the talk now is that the SEC is going to find out it's not security.
Okay.
So there we go. And I don't know what repercussions that'll have further down the road, but for me, the amount of stuff you get on the social media streams, the amount of grown men that will be crying when this basically loses its battle against the tyrannical US SEC, then obviously the SEC is there for a reason. You're not really tyrannical. Don't cut me off. But I'm just saying it's not looking good, because if this was worth, instead of 37 cents, if it was worth thousands of dollars, we'd be a little bit closer to thousands of dollars, surely. So we all read the same news. We all have the same understanding of what's going on in terms of this SEC thing. Some people no understanding of it, like myself. But I just know that if this was worth more money, the price would be telling us it was worth more money. The price is telling us it's here, and that's it. So yeah, I think again, this is another market like the Bitcoin. It's just a hold on to. It's not really that, lots of people will hold on to this until it's worth zero. Feels very much like the .com bubble. I've still got Bueller shares and whatever the Bueller resources. I'm sure maybe you two are too young for that. But every man and his dog who knew anything about trading or didn't know anything about trading had these types of .com bubble shares in 2000, and they've still got the certificates, hoping that one day they might resurrect. But long may they hope. But anyway, this feels the same. It feels like there's a big crash coming, and yeah, batten down the hatches because it's not far away. There you go. I said it. Bring on the hate.
Yeah, there is no hate so far. I think people are starting to believe you, maybe.
Oh no, if they start believing me, it might change.
Maybe there's a bottleneck in the messages coming through. I don't know.
Yeah,
waiting for all
it's
the,
like,
or maybe all the crypto guys have turned off now.
Yeah, well, maybe they have. Maybe they just thought, no, Steve O'Hare doesn't know what he's talking about. Switch off. Which, yeah, when it comes to cryptocurrencies, I don't know what I'm talking about. When it comes to analyzing price, I know a lot more than you think.
Yeah,
there you go.
That's fair. Okay, Taff, do you want to run us through some physical assets, some
All right,
commodities?
Let's go to
real assets.
Yeah, real assets. Stuff that people actually use for something.
Yeah, that's it.
Yeah,
that's
yeah, and I'll start with the black gold. I'll start with crude oil. So yeah, so crude oil has been, as I explained before, we were on a bit of a downward trend here. But what was significant on this downward trend was that at this point here, price failed to make a lower low. We couldn't even match this low here. So for me, that signified that probably the bulls were now in, and the bulls could now really take price higher. But since then we've had a formation. This looks like a double top formation, so it's not encouraging for my bullish view on crude oil. And but this can only be confirmed if we break the neckline, which I envisage to be around 82.70. This level right here will be the neckline of this double top here. Let's go to the intraday and see what else is there. There's another pattern that's on the intraday. Yep, there we go. So on the intraday, we have this pattern here that's playing out. This is a head and shoulders formation, a bearish head and shoulders formation. We've got shoulders, two shoulders here. We've got a shoulder here, and then we've got this head here. So I draw out the measured move target to come out to around 76 if this formation goes to completion. Our neckline is we have a neckline support right about this zone here, this highlighted zone. It should be, the levels should be what, 84, 83, 84 to around 84, 50, 84, 40. This is the neckline zone here. If we break that on close, on candle close, on convincing candle close, then probably it means we're going for completion of the formation. But what's interesting now is okay, this was my gun to the head. What's interesting is that price, you can see price is bouncing off the support. Yeah, that happened yesterday. That happened yesterday. Price bounced off the support here, but if you look closely at this structure here, you can see that it's not, in as much as the bulls are trying to support this level here, but the bears, okay, so price came down and then the bulls took it all the way up, and then there was supply here. We came down again. The bulls took it all the way, but then they couldn't match this supply zone here, so it was a lower high. And then the bears came, dropped it down again to support, and then the bulls came up. This time they couldn't even match this lower high. So you can see that with each successive drive that we have down, the bulls seem to be faltering. So for me, it signifies that probably this support is not going to hold for long, and we're probably going to see a break of this support. If this breaks, then we have an immediate target at 82.70. This is right below that, and then the ultimate one on an intraday basis would be 81.30. So this is probably where I see price to be headed on an intraday basis. Although on completion of the formation, then we're headed to 76. So my view is really, I'll be looking to sell any rallies that I see here because of this formation that we have, and because the bulls seem not to be driving price further up high than they did before. All right, let's go to gold. Gold has been on a parabolic move. Let's just go to the daily. Gold has been on a parabolic move. You can see from the triple bottom that I mentioned here, it's just been parabolic. Just hardly any resistance. In the way that was recognized. It just went shot right through, and right up to the resistance that we see at 1780. From here, we seem to be having a bit of a correction. Uh, let's try and see what it looks like on an intraday. Here we go. Yeah, so on an intraday, yeah, so price came all the way from this triple bottom level here, and then just shot right through, just impulse after impulse after impulse. But as soon as price touched this 1780 resistance level that I drew out, we seem to be having a bit of a correction. For me, this is just but a correction. I think the bullish momentum is still there, and I think we're still in it to at least go to 1800. I think that's the level that I'll be targeting here. But on an intraday basis, I'll be looking to probably take longs at the first support here, which is the 1747 to 1750 zone. I think this would be a good spot to take to buy dips and possibly target the 1800 zone. So I'm still bullish on gold, but looking to buy dips at the first support 1750 to 1747. For the bears, I would only, like I said the other day, I would only short gold probably at 1800. If it goes up, touches 1800, I think this is the only probably viable level that you have to short this, and probably you get a good return in terms of your risk reward if you put your stop just slightly above that. That's on gold. Let's go to nat gas. There you go. So nat gas. So nat gas, I explained before that. So price broke out of medium-term trend line here that started all the way from January. We broke out, and then we came up again. We tested it, we overlapped, and then we tested resistance that was slightly on top of that at 7.16, and then from there we went down. But what's interesting is that if okay, let's go to the intraday and just see. What's interesting is if we notice just this area here, you know, so price is not, we came all the way down to this support zone here that I highlighted, and then from there we've been going higher, and we seem to be having successive successive higher lows. So for me, that's a sign that, you know, the bulls are slightly pushing this, are slightly pushing it, and I wouldn't short this. My bias on this would be, on an intraday basis, would be bullish. And we saw, I highlighted this point here, I think on Tuesday, that this would be a good place to probably take your longs. Price did go up a bit, but it didn't really have that momentum. And you can see what happened the next day is price came down, right? So if you put your stops anywhere above this 6 level zone here, right, you're going to be taken out the next day by price here. So it's always advisable, like I said, these levels here are your sweet spots. So if you're going to take this intraday trade, your stop loss would have been slightly below the 6 level here. That way you'd have been partially protected. You can see how price came down. It took all the stops of the traders that put them above the 6 level, and from there it had enough momentum. And look at that parabolic move; it just went all the way up. So yeah, so what we're seeing now is probably we're targeting this first resistance, which is a trend line. The medium trend line that I talked about on the daily, and I think this is where price is targeting. If you're going to take any longs here, I'd wait for dips, possibly at this swing level here, at 6.42, but preferably I like deep dips. So I'll come to my first support here. I'd wait probably for price to come to this first support, and then take it up from there. So nat gas, I'm on an intraday basis, I'm bullish and looking to buy deep dips. I think that's all from me. Over to you, Joe.
Lovely stuff, Taff. Well done. Okay, let's look at FX then. So dollar index still continues to be in corrective mode. Yesterday we posted more losses, certainly off of the worst levels of the session, but all in all still looks like it is heading lower towards these major levels of support that we've highlighted on the chart, between 105.13 to 104.63. So still the preferred play on this in the short to medium term is to sell into rallies towards 107.68. So no sign of that changing at the moment. So let's look at Euro US dollar. That continues to accelerate away following the closing break above resistance yesterday at 103.48. So we had a decent look above it on Tuesday, but then we had this news about the missile landing in Poland, which scared the market, and we saw money go back into the US dollar, meaning that this closed back below the resistance level. But yesterday we finally got that closing break, and we are posting gains again today. So we can start targeting moves towards this region here, which is at 106.10 to 106.52. So looking to buy dips on Euro US dollar. Looking at Aussie US dollar, that continues to run up against a downtrend resistance line. Yesterday we posted a doji type candle. We are maybe looking to consolidate a bit above this previous resistance, which now may act as support at 66.81. Personally, I think we need to see a close above this trend line, then we can start getting excited about higher prices. We've got the measured move target of the head and shoulders coming in here at 68.74. Let's look at some of the other dollar majors. Looking at dollar CAD, perfect head and shoulders played out here. We fell down to the first support level at the 38.2% Fibonacci level, which is at 132.24. Seem to be providing a bit of support in the short term. Maybe we're going to get a little bit of consolidation here, ultimately expecting prices to break down towards the measured move target of the head and shoulders, and also this 50% Fibonacci retracement level between 129.92 to 130.14. So again, still looking to sell rallies on this, I think, for the time being. Looking at dollar Swiss, that continues to hold this crucial level of support, which we've highlighted here from the swing low from August, and also this uptrend line, which we can see has been in place for a considerable period of time. The diagonal line I've got there in blue. We've seen a really nice reaction from that level over the last few sessions. This candle highlights indecision, and we've had a lot of long-wicked candles while price looks to maybe stabilize around this level. If it starts to break down, then obviously we're going to go with the flow here and suggest that we've produced a pretty large top pattern here. I mean, arguably you could call that, well, I don't know what you call it. Is there such thing as a quadruple top? But it looks like we've got one there. I'd probably call it a double top, saying that this was the first top over here, these two, and this was the second, and we're looking for a breakdown lower. Dollar yen, let's take a quick look there. So we are trading below the support created by this high from back in July. We closed below it on Friday last week, and prices have just really consolidated around this level since then. But looks as though I think the pressure is on the downside, and we may see lower prices there. The next target on the downside is at 135.58. Now, I've held off looking at the sterling pairs just because we've got this autumn statement today, and I think it's going to be the one to watch. So let's take a look firstly at cable. We can see that that has broken out above resistance. We had a couple of levels of resistance between 117.59 to 118.40, and we're pushing on quite nicely today. So it seems to be a decent amount of appetite for buying sterling today ahead of this autumn statement. I'm not sure what the expectations are, but it seems as though the markets are feeling quite bullish going into this. Let's take a look at euro sterling. This is quite interesting. We saw a breakout of a wedge pattern back here on Friday, the 3rd of November. So I would have thought that that would have led to maybe higher prices. We can also see some sort of bottoming formation here. But interestingly, if we take a look at the intraday charts here, so this is a 4-hour chart on euro sterling, we can see a bit of a head and shoulders here and a breakdown over the last few hours below support at 87.08, which indicates that prices may want to start heading lower in favor of sterling. I'm not sure I want to play that at the moment, given that we do have such a massive event a bit later on today. The volatility might just be a little bit too rich for me, but for others, you know, there are some technical patterns here that are starting to emerge. Let's just take a quick flick through some of the other dailies on sterling. Let's look at sterling Oz. So we talked about this earlier in the week, potentially forming a double top. Having looked at it this morning, it looks like we may be breaking out of some sort of wedge and looking to try and push higher. So that's looking pretty strong and pretty robust this morning. Sterling CAD, that's breaking out and making new relative highs. We broke out above resistance at 157.68, trying to make a new high above the high we made on Tuesday. So looking like that's heading higher as well. Sterling Swiss, really quite neat price action here. So we saw this big rally up. We've seen a consolidation in recent weeks, and it maybe look as though we are forming some sort of flag or consolidation type pattern and breaking to the upside, which would indicate higher prices. So it's all looking pretty good for sterling at the moment. Just seeing we've had one request to take a look at Euro New Zealand dollar from one of our followers on YouTube. Just going to have a quick look here. So starting off with the daily chart. Now, I have highlighted a major level of resistance here on the daily, around 173.47. As you can see here, this dates back to December 2020. We saw it tag that level again in February, and we've messed around that level. We did try and break out, but it wasn't really any follow through, and then prices started to roll over to the downside. So I highlighted a bit of a top pattern here with resistance in place at this red line, which is around 170.65. So I think while that continues to stop prices moving higher, I think that is probably the level to try and sell towards. But prices at the minute are really quite range bound between 170.65 down to around 167.41. We've got support here at a 50% fib level at 167.17. So for me, I think it's going to be tough trading for the time being until we can find any sort of meaningful trend. I would say at the moment that the overall trend for me is on the bearish side, and I'd probably be looking to sell into rallies for the time being. But we've got a fairly large level of support here that needs to be broken down for this to really get going on the downside. Hopefully that was useful. Steve, you got some indices to show us today?
Do I have to?
Yes, you do.
Does anyone want indices, really? Okay, let's go. Let's go. I was already with my gun to head challenge, which I've already posted as well. So I want to hurry up just in case it gets stopped out before I get around to it. Dow Jones is has broken through the weekly downward trending resistance line, but it hasn't got past this horizontal resistance, which we formed the evening star formation back in August, the week of the 15th of August. But it is stalling at these levels. So could it be another lower high? Very, very potential so far. Very potential, very possible. Anyway, we had this inverse head and shoulders, which has played out in the S&P. I'll show you it in a minute, but not so much in the Dow. And we've stalled 3 candles, which look really negative. Hanging Man, Shooting Star, Doji yesterday as well, 4 candles. So it looks like it's really stalling. Could almost look, maybe it's forming some sort of diamond formation. I don't really want to draw it on that chart. It's quite a tricky one to draw. Now I'll leave it for the minute, but we've got potential for this to be almost like a bit of a flag, but if it's a diamond formation, there is potential for it to break down from here. 33,300 it would be the level to watch. A break below there, and I think that'll open up to the downside. Above, we go with the flow above, but resistance comes in not too far away, 34,277. But we are above the Ichimoku cloud on the daily chart, so we are in this upward trend, but it looks like this impulsive formation may be stalling. We may have just finished the 5th wave, ready for the correction. Let's look at the Nasdaq. The Nasdaq on the daily chart, that's pushed higher, and we have formed a bit of a topping formation into the cloud, also into the 100-day moving average with this shooting star from Tuesday. Yesterday's price action was a bearish engulfing candle, and we're on the back foot this morning. Support coming in at 11,665. We're in the cloud, so we do get volatility in there, but a break below there, and I think we've got a good opportunity to move lower, maybe towards the 11,400 level. Really need to push above this 50% fib retracement that we didn't manage to get above Tuesday. It opens up the upside, but again, expect resistance to come in at 12,460, the 200-day moving average just above that at 12,600. Now, this is the sort of like the inverse head and shoulders, and they are different. If we look at this inverse head and shoulders to this one, I've taken the initial rally here. That's formed the right shoulder, so it's a downward sloping neckline. Now, I could have done the same with this. We could have got something like, get that out of the way, something like that. Downward sloping neckline, and it's broke up and it's hit its target. So it just, you've got to be sort of like really on the ball with these inverse head and shoulders. That was a double bottom opportunity anyway. That's what we were focused on, rather than because the 2 bottoms here broke up and the measured move target hit lovely. So that played out really well anyway. So S&P levels to watch. We've just stalled at the measured move target from this inverse head and shoulders formation. The 200-day moving average is above that at around about 4,050 today. And price action sitting on the level, really, a break below 3,950. And again, we open up the downside. We'll have a little bit of support coming in here in the shape of the 55-day simple moving average there. So yeah, that's pretty much the levels to watch on the US side of things. Looks a little bit nervous up here. Looks like, oh, we're at the top of the mountain and I'm feeling a bit sick.
Yeah, I kind of agree with that. I think if this market was going to continue moving higher, it needs to have done a bit more. Just based on that Thursday we had, where the euphoria was just massive and everyone was buying everything, it's just not really done anything since then, which, yeah, maybe is cause for concern. Just one more thing to go through on FX before we get to the gun to the head, Steve. Sorry about this. I'm not doing it on purpose, but we've had a request to look at Aussie New Zealand dollar. Again, from one of our viewers on YouTube, so thanks for that. Fair amount going on here on the chart. I was looking at this yesterday, actually. Just my take on it. So it looks like this was trading in a really nice bullish channel for a considerable period of time, dating back to kind of November 2021, until we then saw a break of it in October. Now, since then, it looks as though we formed what I can see as a head and shoulders top pattern. It is a downward sloping one, and generally, when you see those play out, they can be quite aggressive and play out quite nicely. If you look at the break here of the neckline that we got in October, we saw a push lower, and now we've seen a retest into roughly the neckline based on a horizontal level, as well as the sort of downward sloping one, and prices are being rejected. If we look even closer at the price action here, we can see that potentially a bearish flag is taking shape here. So if we see a close below or roughly where we are at the moment on the daily chart, then I think that would indicate that we've completed a flag pattern as well. So it looks as though it's all going on here, really. And if we're looking at sort of measured move targets and where we think this could potentially get to, I'm thinking down at 105.55 over the medium term, which roughly lines up with a 78.6% fib level of this entire up move here. So it looks as though the tables are turned on this one, and we may see a period of Aussie weakness versus New Zealand dollar. And yeah, technically that looks really nice at the moment, actually. So if anybody's looking at that or hadn't been looking at it previously but now likes the look of it, yeah, an interesting one to watch, I think.
Nice one, Joe.
Okay. Cool. Right. Looking at the gun to the head trades then. So just to reiterate what we do here, this is just a bit of a fun game that we go through every session. We pick trade ideas live on the video. We place them at market. All of the ideas have stops and targets. They must have risk reward ratios in excess of 2 to 1. These ideas are placed now. They're published to our profile and they will expire at 9 p.m. UK time or when the stops or the targets are hit. So if anybody wants to check them out, please feel free to do so. We're going to run through 3 ideas now that we fancy for today. Steve's got one ready. I'm going to go to him first because he's already published it and I don't want to delay him any further. So off you go, Steve. Talk us through it.
Take your time, Joe. It's on side.
Okay, good.
Anyway, we got the bearish flag on the Bitcoin. I'm still going with it. We had another lower high yesterday, so if we'd have just stuck with the first one when I did it, then we'd be quite a way on side. But we've got to do this every day. But I'm going to go with this one, and it's a humdinger. Whoop! 10 to 1. 10 to 1 shot we got today. Basically risking 400 ticks, 400 points in Bitcoin. It's not a lot. Bitcoin is quite wild, but it has sort of steadied down a little bit. And we're getting short here at 16,590. Stop is at 16,990. And the target is 12,590. As I say, if we get a break of this, then all hell could break loose. It's almost, if we take it back to, let me put the Ichimoku cloud on here just to give you a bit of an idea. We're doing the same sort of thing as we were back here. Bobbing along nicely, breaking down through the Ichimoku cloud, and then collapse committee. That was like from the highs, 21,478. Bobbing it down nicely. We get that break below the cloud, which we are sort of like really pushing for that break below the cloud. Then a collapse committee. That's a little bit of a, that's pretty sort of like flaky, that last thing about the cloud. It's just I wanted something else to back it up. Anyway, over to you. That's my trade idea. It's published. It's already on there. I've already committed.
Okay, wow. Well, let's see if that plays out. I mean, if it does, that's a proper collapse, isn't it? And who knows? It could happen at any point, right? It's just it's such a fragile place at the minute that who knows? So best of luck, Steve.
With Bitcoin,
Yeah, I was trying to look for FTX coin, but
it's gone. And it's gone.
I can't find it anywhere. I was really looking for it because I wanted to sort of. What about that one? Oh, there you go. There it is. It's not gone completely, Joe.
Oh right. Okay. Sorry. That looks.
Yeah, it's pretty gone. It's pretty gone.
Yeah, it's gone. It's finished. Right, Taff, give us a trade idea, will you?
Okay, fine. Okay, I'm just battling
gold.
Yeah. Okay, so I'm going to short gold, right? This is just on a backdrop of so I'm looking at the parabolic price action that we saw here, right? Like it's just been going up, and then it touched resistance at 1780, I think. So I envisage a situation where it comes down. It comes down to, okay, fine. Let's go to intraday and see what it looks like here. There you go. Right. So I'm looking at a situation where it comes down to this first support level here that I drew, which is I think 1750 zone. So yeah, so I'm going to short it and hopefully it goes in the money. It doesn't look like it's going right now, but I'll stick with it. All right. Let me just give you the parameters. Okay, here we go. Cool. Fine. So I'm shorting gold at this is what 1769. My target is 1747, and my stop is at 1778. Yeah. So I'm looking for like a correction on gold, and my risk to reward ratio is 2.56. Yeah, let's
Very
see how
nice
that
indeed.
goes.
Okay,
All right.
cool. Good luck. I'm taking a look at Nasdaq today. So I know Steve talking about this looking a bit fragile. I kind of agree, but if we're looking at price action alone and the structure of what we've got on the daily chart here, we've got an inverse head and shoulders on the daily. We saw a nice breakout there on Friday, and since then prices have been holding the neckline. So I've just got to think this is a bit of consolidation, and maybe at some point the buyers are going to step back in and start pushing this higher. Looking at it on the intraday basis, we can get a bit of a clearer picture of this inverse head and shoulders. We've also seen a break of this bearish channel. So it's all happening here. Prices, yep, still holding above that neckline. So I'm going to try and buy it. And the entry's changed a little bit. So let's go. 11,773. Stop loss at 11,523. Targeting a measured move target of the inverse head and shoulders all the way up to 12,900. So looking for a 4.5 hour return on that one today. Probably a bit punchy, but you know, if we get a day like we did a couple of Thursdays ago where the US markets just went crazy, who knows what can happen. So that's my trade of the day today, and will be published momentarily. So there's 3 trades for anybody watching that is interested. Let's take a look at what is out for the rest of the session. So we've got this autumn statement which is due out. So talking about, you know, lots of cuts to the financial system just in order to pay back some of the debt that we've got. We're looking at 50 billion worth of cuts. So that's the number that you know, everyone's going to be kind of focused on. Looking at the initial indications, sterling is moving higher, so maybe they're expecting something, you know, that's going to boost sterling. Certainly seems to be moving that way at the moment, but things can change pretty dramatically. There will be follow-up statements after they announce the budget. So we're looking for the OBR forecasts and for the borrowing levels in the economy. Then at 1:30 UK time, we've got the US Philly Fed manufacturing survey, as well as the latest read on US jobless claims. So fair amount of high impact data today to keep an eye out for. But I think the one that we need to keep a close watch on is this UK statement. If you have any exposure to sterling, please do be very cautious and careful and aware that this information is going to be coming out around that period. Okay, gents, that's it for the video today. Hope everybody's enjoyed it. Anything to add before we wrap this up?
No, be careful out there, guys.
Yeah, for sure. Right, have a great day, everybody. We'll see you tomorrow. Bye-bye.
Cheers.
Bye.